Why is the stock market down? It was just growing like there is no tomorrow. A couple of things came up together, the three main ones we will go over today. I'm not a financial advisor, do your due diligence before investing. Reason number one, September happened. The stock market has been on an upward motion and then all out of the blue, it tanked. Everybody has been asking me, what happened? I don't see any news of anything bad. For the last 4 days, the stock market was open on September 1st, Tuesday, to September 4th, Friday. Every single day was a downward motion. Everybody's talking about the stock market falling and nobody understands why. And these are the news. Stock market, the stocks won. Why the stock market tanked today? Why was the stock market down today? The stocks fall. What happened to the stock market today? The stocks are falling. These two beaten down stocks, down plunged 740 points, S&P rallies. Here's why many stocks are down. Here's why the stock market tumbled last week and just keeps on going. It seems and feels like there is no reason for this, and while all that is true, September happened. September has been historically a bad month for the stock market. Following over 70 years of data, the month of September, the market goes on the decline. The month of September during the year is like a Monday during the week. Usually Mondays, the stock market is red because many people are selling. And similarly, on Fridays, the stock market is green because many people are buying. It does not go like that every week, but usually that's very common. That is why I usually buy on Monday or on Tuesdays right after the sell-off. I was about to say that I usually sell on Fridays since everybody's buying, but I never sell anything, very rarely, but I do avoid buying on Friday because everybody else is buying. On the Investopedia.com, this is what I see. Why people say September is the worst month for investing. Why do people say September is the worst month for investing? Often in the financial media, you will hear people make reference to specific times of the week, month, or a year that typically provide bullish or bearish conditions. One of the historical realities of the stock market is that typically has performed poorest during the month of September. The Stock Trader Almanac reports that on average, September is the month when the stock market three leading indexes usually perform the poorest. Some have dubbed this annual drop-off as the September effect. The key takeaway: since 1950, the Dow Jones Industrial Average has averaged a decline of 0.8%, while the S&P 500 has averaged a decline of 5% during the month of September. The September effect is a market anomaly unrelated to any particular market event or news. The September effect is a worldwide phenomenon. It doesn't only affect US markets. Some analysts consider negative market effect may be attributable to seasonal behavioral bias as investors make portfolio changes to cash in at summer's end. Understanding the September effect: since 1950, the month of September has seen an average decline in the Dow Jones Industrial Average of 0.8%, while the S&P 500 has averaged 0.5% decline during the month of September. If you see any value on the news I am bringing you, or even if you don't see, please drop a like, subscribe and hit the bell so you get the next video. Also, feel free to share this video with a friend. It will help the channel grow, and since schools do not teach this type of content, it is entirely up to us to become financially aware. Reason number two, the election is coming up and the uncertainty is bad for stocks. On the Forbes news, this is what they give us. Here's how the stock market has performed before, during and after presidential elections. Buckle up, prepare for increased volatility. Historically, volatility in the stock market is elevated in the months leading up to an election. This is logical, as the markets hate uncertainty. For investors, it's important to step back, put personal feelings about politics aside, and objectively assess the situation and what it might mean for your personal finances. Be aware of bold predictions. Recall the 2016 election. The 2016 election serves as a fitting example of how predictions can grow awry and how quickly the market can incorporate new information and recover. As we see on this graph, the uncertainty around presidential elections causes volatility, but on the long run you can see here that, in my opinion, it's almost a straight upward line. This tells me that the approach of buying the dips and holding long term is the secret for profit. No one knows when we are at the highest peaks, and no one knows when you are at the lowest bottom. So we can just do the best we can. And the third reason is that investors bought too much and too fast. We are in a bubble. Investors have been buying stocks like there is no tomorrow. Some stocks have been bought so much that their prices make no sense. A sell-off at this point is just healthy. A sell-off like this provides us a sustainable economy and stock values and prices that make sense. On CNBC.com news, we are certainly in a bubble. Strategist warns, but don't expect it to pop anytime soon. As I scroll down, the S&P 500 tech sector fell more than 4% for the week, intensifying speculation that the stock market shakeout was likely not over yet. The space had largely been responsible for the broader market's strong comeback off its coronavirus lows. I think we are certainly in a bubble territory. Jonathan Bell, Chief Investment Officer at Stanhope Capital, told CNBC's Street Signs Europe on Monday. We are certainly in bubble territory. Strategist warns tech stocks are unequivocally in bubble territory, a chief investment officer told CNBC on Monday, but that's not to say the recent tech wreck is going to continue in the short term. Some of these companies are just doing well, and they fit right in for the new world we live in. For the conclusion, recap and final thoughts, the three reasons the stock market is down. First reason is September happened, and historically data shows that for the last 70 years the month of September the stock market is down, similar to a Monday during a week. The reason number two is that the election is coming and that provides volatility. And the third reason is that investors overbought overfast, so the sell-off is not entirely bad because it provides stocks with more reasonable prices and values. The stock market has been booming, growing as if we were in a great economy. While a few sectors like the tech sector, for example, Google, Amazon, and Apple have been growing like there's no tomorrow, other sectors have been suffering like the service sectors, restaurants, airlines, and hotels. Following the don't follow the herd logic, so buying on Monday and selling on Friday, I'm applying this to September and I am buying stocks like I always do. I don't invest all available money in one shot, but I do invest some continuously. We don't know what will happen. The market could go up or could go down tomorrow or next week. Taking everything in consideration, I try to buy more when the market's down and buy less when the market's up. You can leave thoughts, comments, questions and ideas in the comment section down below. Thank you so much for watching this video. Feel free to check out some of the other videos coming up on the next screen. Have a profitable and wonderful day. The stock market has been on an upward motion and then out of the blue, the stock market has been on an upward motion and then out of the blue. Reason number two, the election is coming. S&P 500